good morning, or whenever you happen to be listening. This is John Sheeley, and I am very happy to be presenting the things you should have done in your tax office this week. This week being the week between Christmas and New Year's, but sadly, I didn't get this thing posted December 26th like I wanted to. Quite honestly, what do you expect for a free webinar, right? Webinars presented to you by Tax Practice Pro. We're a continuing education provider, although we're not providing any continuing education for this video. If you'd like to see our other events, you can see them at www.taxpracticepro.com. I promise that's the last commercial you're going to see today. If you really want to know more about me, here you go. You can click pause and read this to your heart's content. I'm not going to read it to you. The focus on this event is to talk about preseason planning and the actions you need to take. It's not too late to get some things in place. There are some changes this year that may impact the number of returns you can get done during the season, and I want to help you think about maybe how you can mitigate some of the damage from the PATH Act to your practice. And that's right, there is, in my opinion, some damage. So we're going to mention tangentially some things that have changed, although I'm not going to explain them. This is not meant to be a tax update and review class. If you haven't gotten one yet, there are plenty of places where you can still engage into one of those. But our purpose here is practice management and some things you should be thinking about for focus on your practice. Everything in here, I believe, is current as of December 28th, 2016. And again, I'm not going to read the disclaimer to you, but please, if you think it's urgent, you should read through this, please. So, you as tax professionals are a little too passive. You don't sell, we can't sell. But we don't always communicate very well either. And sadly, our clients don't hear us either. They have too much information coming in. The use of the word urgent is clearly overused in this society. Urgent means I'm a millennial, do it now, because I have an arbitrary date. Sadly, too, how many documents arrive with important tax documents enclosed, and your clients take it unopened and put it in the pile of things they're either going to mail to you, drop off to you, or I'll open it later and scan it into him or her. But this year, there are some important changes that impact our practice that the clients need to know about before they come in, maybe before they send their documents or upload them or drop them off. Otherwise, I think you're going to spend too much unproductive time, you and your staff, dealing with clients. And let's face it, there's 105 days to tax season, less if you look at when e-file starts, and clearly no one wants an extension, no one wants to wait, and it's all your fault. At least maybe you have better clients than I do. Mine tell me it's all my fault. Most impactful thing this year, due dates have changed. I think at this point most of us know that, but this is a table from the Internal Revenue Service website. Some of these things are very helpful, like the FBAR due date changing, but some of these things are impactful. I think the two things that are most impactful are Form 1065 due dates moving forward 30 days to March 15th. Certainly all of your existing partnership people need to get notified of this immediately if they haven't already been notified. And maybe less impactful for some of you is the C Corp due date moving back 30 days to April 15th. Certainly that's going to help my practice, but I'm also going to get into arguments with people who may still want it March 15th, whether it's due that day or not. So how does this impact your practice? Well, how about new partnerships? Even the ones that actually read the CP 575, that's the letter that tells you what your employer identification number is. That letter's wrong. As of the other day, the 27th, it's still wrong. And there is a disclaimer on the IRS cluttered webpage where you apply, which says, oh, by the way, the due dates on here might be wrong. Take a look at the form instructions. For fun, I went to the 7004 form, and it's still the 2012 version. It also has the wrong due dates on it, at least the one that's posted. Hopefully the service will change that. So you need to reach out to people. Who's formed a new business? Well, real estate developers, you have some clients that you know might have formed a new partnership. But what about everybody else? It's bad enough they show up right before the due date, but what about the ones that may have wrong information? Your website, your emails, your year-end communications, your organizers should all be communicating this due date change. My friend Judah Callis, who generously lets me take things from his website and include them in our webinars, as you can see on this screen, has a question on all of his organizers. Did you form a corporation, LLC, LLP, or partnership? Well, hello, I'm going to immediately follow up with you on this. So if you want to steal some of this from his site, I gave you the web address there along with the name of the worksheet where I found this particular snippet. So think about how you're going to communicate with clients. Think about asking everybody, did you form a new business? Now, I didn't put this on here, but those of you that are enrolled agents, CPAs, and attorneys, you should be familiar with Revenue Procedure 84-35. This is the revenue procedure that allows you to abate a late file penalty on a partnership. Partnership needs to have 10 or less partners. Partnership needs to have, the partners need to have filed on time, and there's a couple of other things. But you can call Practitioner Priority Service, ask them to run the 8435 assistant for you, tell them that your client meets all of the criteria. Again, Revenue Procedure 84-35. And just as a fun note too, on a late filed partnership, I would probably tell all the clients that, hey, this is going to be penalized. Tell them what the penalty will be. It's, I think, $195 per partner per month. And tell them you're a genius at getting these things abated, and get prepaid for the abatement. Tell them, I don't know, that it's X dollars normally for an abatement, but if they prepay today, since we know this is going to happen, you'll take the power of attorney, and as soon as it comes in the mail, you'll call and argue and fight for them to get that penalty abated, but get paid today. Great way to increase your income for something you're going to need to get paid for anyway. Don't be afraid. You know, you don't like to communicate. I don't either. I don't like to be Dan Rather, getting paid to deliver bad news. In this case, do it and get paid that day. By the way, my mother, a retired enrolled agent, says I'm going to hell for some of these things that I say. So that being said, another concern that's going to impact your practice is state conformity. The AICPA website does have a chart, but it seems to be getting out of date. You need to be concerned about, especially on the 1065 and the C Corps, what date have the states adopted? Some of the states for C Corps are still at March 15th. This is as of 2 weeks ago, so Illinois, Massachusetts, and Wisconsin may have changed. But you should be familiar with what the states you need to prepare returns for are doing. You may be in a situation where you're filing extensions for the state before the federal return is due. But this could be a common problem for errors and omissions here, where we get a penalty for an oh shoot moment where we miss this. And sadly, most states are not really abating penalties because they need the revenue. Okay, under the PATH Act, we have new filing due dates for Form 1065. We do have for 1065. We also have for Form W-2 and Form 1099. So in the past, you've had a due date of January 31st to have W-2s, to W-3s, and 1099s in the hands of the recipients. And of course, most of your clients are probably like mine. They think that the name, address, social security number, and amount you paid them, it's 3 out of 4. You don't have to give me all the information. So by January 31st, you'd get a half-done packet, and then you start getting phone calls. My guy wants his 1099. My guy wants his 1099. Yet the client gave you wrong information. This deadline, so you had until February 28th if you were going to paper file, or March 31st if you were going to e-file. Those dates are done. You must have the documentation, including the IRS copy, filed by January 31st. So how does this impact your practice? Getting them out by, this says February 28th, which is wrong. We have to get them out by January 31st. How are you going to solve this? We've been contacting clients. We send an email. If you want a copy of that email, just contact me. I'll send it to you. It basically says, did you pay anybody more than $600 last year? And then it takes them through the requirements and working with us. We've found that they need 3 contacts. They need an email. They probably need a follow-up mail. And then at some point, if you haven't heard from them, you need a phone call. But how is this going to impact your practice? I don't want to be waiting in line or chasing someone down on the 30th of January still. So we're putting firm deadlines in place. If you don't have stuff to me by January 21st, we're probably not going to be able to help you. And this is what we've been telling people. I wouldn't accept any work that comes in unless they have all the data. Why? Once you accept that packet of half-assed, half-done information, you kind of own the work. You don't want that. They can go do it themselves because you don't want to be running around like a crazy person putting this together. The penalties are now outrageous. They're $100 per document if they're after January 31st. You don't want to do this. I've heard from other practitioners that 2015 penalties were difficult to get lifted. Don't get stuck. We're giving people a firm due date, and by the way, the later they give us the data, the higher the fee. Our normal fee is if you get the data to me by this coming Friday, January 6th. If you don't have it to me by that date, the fee goes up. If it's by the 13th, the fee goes up on the 20th, and after the 20th, we're not taking anything from you. The way we've sold this to people is we've told them our regular price is the penalty price on January 20th. They can have a discount if it's in by the 14th. They can have a bigger discount if it's in by the 7th, and then we're going to get that data out for them. But when they bring in the data, we're going to do a quick look. If it's not complete, we're not accepting it. We're sending them on. And quite honestly, you have to have an engagement letter for this, and I would say in that engagement letter that if you miss this date, we can let you go. And probably if you miss the date, I'm going to call you up and give you 3 more days. If you miss that 3rd day, I'm going to let you go. I can't own your problems. Take the stress out of your life. Do the same thing. Think about how you can make this work. Alternatively, too, you're going to use the PATH Act here to be the driver. You're going to blame the government and say, government took 2 months. Exaggerate a little. I used to have till March 31st. The government has given me till January 31st. I'm being generous. Get me that data 2 weeks earlier so I can meet the 2-month earlier deadline. Again, how can this impact your practice? How is this impacting your practice, and what can you do to fix it? I also recommend now get paid in advance. How many 1099s is that? Give me my check. Give me my payment today. If you get some pushback, tell them sorry, and then I can't help you. If you don't have it today, you're not going to have it in 2 weeks to pay me. Tell them if there's an overpayment, you'll apply that to any other work you're doing for them, the tax return, etc. Again, get paid. So this is probably old news, but refunds that have refundable credits have now been delayed, and this is different than other things the government has tried to do in the past because this is now in the code. The IRS must hold refunds. Have you told your clients this yet? If not, you should. Jackson Hewitt already has a commercial out that's telling people this. So make sure your clients are hearing this from you, and quite honestly, you want them to hear about this delay before they come into the office. Why? Like the Affordable Care Act last year, do you really want to sit through 10 minutes of complaining from people? Why are they doing this to me? Why me? Why me? You want them to be comfortable with this. They won't be happy with it. You want them to be comfortable with this before they come in so they don't take up time either with you or one of your employees when they're doing the return or your front office staff. You just want them comfortable with this and knowledgeable about it. No surprises. So for you, no credit or refund will be issued if it has a refundable credit, the additional child tax credit or the earned income tax credit. They won't be releasing refunds before February 15th. The information we have is that these refunds are going to be delayed. The IRS is going to process but hold. They still want you to file early. They're still going to reject mismatches and other problems. So you want your people coming in, but certainly you need them to know, again, before they came in. If you normally work on 1-hour appointments and you work close to the 1 hour, if someone you spend 5 minutes explaining this change, they spend 5 to 7 minutes complaining, and you spend 5 minutes calming them down before you even start the return, you just lost a quarter or a third of your meeting time. It's going to put you behind. You're going to do less returns. That'll translate into either making less money or having more extensions, neither of which is something you want to do. How does this impact your practice? When I owned block offices, we referred to these folks as money needers. They planned their year around the ability to have a large lump sum payment in mid to late January, early February at the latest. Many people are going to see this money a month later than normal. It's going to be tough on them. How are you going to compete? I'm not a fan of refund advance or whatever the products are called these days, but they're out there. Your software providers probably integrate with somebody. Maybe you need to add that to your practice. This is the time to do that. There's usually a bank due diligence that you have to follow through on the application process, and usually a bank training you need to do. Look into that now if you think you're going to need it. Probably costs you nothing to set this up, so why wouldn't you have that in your back pocket just in case you need it? By the way, they will withhold and give you your fees usually when you prepare the return, so you won't be waiting for someone to get their refund either. We've been emailing this information to all clients we feel are affected. Mail to those that don't have an email address, and Maybe you even want to mail it to everybody anyway. Simple one page. Hey, by the way, I would do this as a separate communication in addition to any annual communications you do. Some of your clients might need a phone call. Everybody has a cell phone these days. Be proactive. You don't want this happening in your office when they're first coming in to get the return done. It's going to tie up your time. You'll do less returns. What's your staff saying to people? I'd have my staff trained when they're coming in for their meeting. I would be reminding people of this. I would take a look, too, at my software. The impact isn't as bad as we thought. We took a look. Really, anybody that filed before the first Friday of 2016 are the ones who would not be getting their refund before February 28th. Otherwise, everybody else this year would be getting it, the 28th, 29th of the month, whatever that last Friday is this year. Yes, I know it's not a leap year, so it may not be the 29th. Look at what your staff is saying. Get this message out. Otherwise, again, how much time will you lose at your appointment? What does that translate into your pocket? I want to mention that preparer penalties have been expanded. We've had due diligence for the Earned Income Tax Credit for a number of years. That due diligence has been expanded to the American Opportunity Tax Credit and Child Tax Credit returns. So there's a $500 penalty now for not having adequate documentation or fraudulently preparing a return that includes American Opportunity Tax Credit, Child Tax Credit, Earned Income Tax Credit. So first, on one return, all three can apply. So it's potentially $1,500. It's been indexed now, so it would be $1,530 potentially on a return. And this has the wrong slide, but you should be aware that if you have employees, your employees can be penalized, but that can also translate into a penalty for you for failure to supervise. It's easier to get out of the failure to supervise penalty, but be aware that's out there, and there are things you can do to mitigate that as well. But again, beyond the scope of today. So I've had lots of people tell me, I don't do when I'm doing tax update, I don't do EITC returns. Down here at the club, when we're having a drink and smoking a cigar, we don't talk about that. Well, that's fine. You do have clients who have children, I hope, and that's a pervasive problem in our society, these people that have kids. And you now have the same due diligence requirements. Your office has the same requirements. And you clearly need to retain documents. Some of you have said to me, I don't need to retain them, I need to see them. You need to retain them. So just put this into your mind. I have a 13-year-old. You've been my preparer for 15 years. You've done every tax return with my child on it, and it's always gone through. You, in fact, have seen my child. Guess what? You need to do due diligence if I get the child tax credit. You should consider preparing all of your clients in advance to bring in that information. Same as what you look at for the Earned Income Tax Credit. It's probably a one-year effort on getting birth certificates in. It'll be an annual effort getting a piece of documentation to prove the child lived in the house with them. I don't think you want to first be mentioning this when someone drops off their documents or comes into their first meeting. You want them coming in with these documents, don't you? You should be notifying them in advance. Email, mail, phone calls if needed. Make a list, check it twice. Make sure you've communicated to everybody. What's your front office staff telling people when they schedule a meeting? Maybe they need to say, are you aware about the changes the federal government has made to documentation for children? If the caller says I don't have children, that's a great you're done. But most of them are going to say, I do have children. What do I need? And your front office staff should have a pre-written cheat sheet that they can say, you need to bring me bing, bing, bing. Again, the more times they hear it, the less complaining they can do, the less problems and whining I think you're going to have, and the more returns you'll get done during tax return. You'll do less returns if you spend, this says 0 minutes, but I mean if you spend 10 minutes explaining and arguing about due diligence. What happens if clients come back a second and a third time? Again, same thing. They're going to take up your time, your front office staff's time. That will translate into less money. And update your organizers, update your website. And again, place blame on the federal government. Our clients are good at blaming us. Let's blame the federal government that they made this change. Doesn't matter why they made this change. They're turning us into IRS agents, and we feel really bad about it. But sadly, potentially there's a $1,530 penalty if I don't ask you these questions and gather this information. So the IRS has released the final Form 8867. The draft is down. You can see Look at all these questions. This is just the top third of the sheet. You have to answer, interview. Item 3B, review adequate information to determine the taxpayer is eligible to claim the credits and in what amount. This is on the bottom of that 8867. The 8867 is submitted with the tax return, right? It's part of a true and complete return. Look at item D. Keep all 5 of the following records for 3 years. A copy of the form, a copy of any worksheets, copies of taxpayer documents you may have relied upon to determine eligibility. It's no more look at it and document the file. Oh, I saw the birth certificate. Get it. Look at it. Is this person the parent? A record of the additional questions that you've used and the answers that were given. If not, it says right on here, you're subject to a $510 penalty for failure to comply. You don't need this. Tell your clients in advance, gather the documents, retain them in your file. Personally, you want to be paperless. That's me. Okay, education credits. We've seen, again, same deal with education credits now. We've known for a while they've made some changes that are going to change the 1098, but for 2016 returns, the IRS is not going to penalize the colleges for not doing the 1098s correctly. So you still cannot rely on the 1098s for the amount of tuition that was paid. You need to see documentation. Our office has been collecting, we haven't been relying on the 1098Ts for a few years, so we've been getting transcripts and other documents always. It comes in handy, of course, when there's a mismatch and we get a CP2000 or whatever notice. We already have the documents in the file to answer. What are you telling your clients? Blame the government. Get the information. Again, mail, email, phones, and staff. Save time during meetings. Tell them, go online, download the transcript, bring it in with you. By the way, you don't want to let people in your office use the computer that you use to prepare tax returns. My opinion that's a 7216 or a Gramm-Leach, probably a Gramm-Leach-Bliley violation. You don't want to do that. Again, my opinion. So pricing and due diligence. I think the due diligence requirements are a good thing. Why are they a good thing? Most of you tell me you're unhappy with how much money you spend or you're collecting from your clients, and sometimes it's difficult to raise fees. So I would use this as a way to raise fees. I would certainly say I have a new due diligence requirement for anyone with children. It's increasing my record keeping, my data storage, my administrative and support staff time, and my time with you. So we're charging whatever you're going to charge. I would charge it separately on the tax return. I'd be very clear so people don't think, you know, if your tax return fee last year was $300 and it would have gone to $325 this year, if your bill just says $375 because you're adding on a $50 due diligence, people are going to run around and say, oh my God, John lost his mind. His fees went up 25%. Well, no, they didn't. My fees went up 5 or 6%, but we also have this new due diligence. So again, consider what you're going to do and do that now. Certainly, I would notify clients in advance. Think about it. You don't want people being crazy. But if you weren't going to notify people in advance about the fee increase, this is the one thing. Maybe it would be okay to talk about at the meeting. I wouldn't surprise them. I'd talk about it. But again, pricing isn't the point of today's meeting. All right. So there's if you haven't already done this, you do need to update your e-services account. You are able to do this via the Get Transcript service on the IRS website. You should have received a letter that has a unique code. I do know that starting December 23rd, e-services or the Get Transcript application is down for modification if you are a new user. But if you've used it in the past, you should be able to access it. Either way, if you can't get into it, you do need to be able to call the you can call the e-services help desk, and they can help you update your information. What I'm hearing from, so if you don't do this, you're not going to be able to e-file either. This is something that at least my tax software connected to e-services to make sure that I had done this, and it said I was valid to e-file. But I understand if you have not done this, you will not be eligible to e-file until you do it. So if you need to call, this is the week to call. Call before the crazy people that there are people that are just going to open their tax practice the week of e-file, and they're going to say, oh my, I need to do this. So get in there, make the call. I understand that at least last week there was some pretty long wait times. So try and get on the phone now, get on hold now. I understand if you're calling in to validate, they're using that Experian utility. You've probably seen this where it says to you, have you ever been associated with this address? What month did you close in your house? That crazy stuff. Well, eServices is asking some super um, minutiae questions. I understand that if you have a home equity line of credit, they're asking you what that account number is. I have no idea. It's a direct debit from my bank account. So I'm thinking, go get a copy of your credit report and have it in front of you before you call. You can get a free credit report once a year from annualcreditreport.com. Annualcreditreport.com is the website that was set up when the Federal Trade Commission sued the big three credit reporting agencies. I think this is a great place for you to do that. You should be doing this anyway. So why don't you go ahead and download that and have that in front of you if you call eServices to get turned on. So I'll give you a quick talk about the Secure Tax Office. I'm always concerned about protecting your client data. Your software will have changes this year. The IRS Security Summit added 17 changes. You won't see all of them, but I see on Drake, which is our software, if I don't, it made me give everyone a password. The administrator password is different. If I walk away from the computer, it logs me out and requires the password. It's good stuff. What are you doing in your tax office to share data? If you don't have a secure portal for sharing tax returns and other files with third parties and your clients, you need one. Get your feet wet. Secure File Pro, it's a product from Drake, but it works other than Drake, and it's $99 a year. Take a look at it. SecureFilePro.com. I don't get paid for this. It's a good, inexpensive product. Emails with passwords are no good, so I can buy a program for about $20 from these guys in Estonia, and I can strip the password off a QuickBooks file, off your any PDF, any Excel file. So don't email that stuff. Really, use anything that's got personally identifiable information, social security number, for example, doesn't belong in an email, regardless of how much protection you think you're using. If you lose a laptop or a USB drive, that's a data breach. You need to notify everyone who could have been on that return. And I know some of you still have your 2005 tax software in case you have an urgent need to do a 2005 return. Man, you've got thousands. Even if you have a small practice, you've got at least 1,000 names on there. Your current and past clients, partners on 1065s that you don't do their personal return, you're going to have a data breach with their data. 1099 and W-2 recipients that you don't do the personal returns, but you do those documents. We have situations where we don't do the payroll any longer, but when we went to tie out someone's W-2, he's got 60 employees, he sent me all the W-2s, not just the W-3. So I've got in my files these 60 people. Oh my gosh. Man, you got to have data protection. You know, and if someone had a breach, if you lost a laptop or a USB drive that potentially had your whole client database on it or access to it, what would it cost to us just to assemble this list to notify people of the data breach? You've seen these letters. You have to report to the Federal Trade Commission and state agencies. You know, here in New York, there are you have to report to the police and 3 different state agencies about your data breach. It's insane. Please, encrypt laptops, encrypt your USB drives, or don't use a laptop at all. I don't know. You have to think about your business, but this is the time to think about it. This is the time to think about that level of security. If you do have a data breach, you're buying credit monitoring for 18 months for everybody that asks for it. Take a look at your insurance. You don't have cyber insurance built into your standard office policy or your standard errors and omissions policy, but it is available. My State Farm office premises policy, I bought, I want to say, $50,000 worth of coverage for about $50. Yes, it's mispriced, it's underpriced, and they need to fix that, but for right now, that was a pretty good deal. But ask all your carriers. They may have something that's affordable. Some of your associations have deals with preferred providers for this stuff. So take a look there too. But now is the time to put this in place. You need at least $50,000 worth of cyber and breach coverage. I bet you it's going to cost you half of that just to assemble your list, and probably another $25,000 just to get it mailed, set up an 800 number, and have someone able to answer all the questions. Forget about even paying for, credit monitoring for a couple of hundred people. I want you to think about accessing on the IRS website the returns you filed per PTIN. take a look and just make sure that no one has stolen your PTIN. I know of people who have had their PTIN stolen. Let's face it, if you're a fraudulent preparer, you're going to steal a PTIN. You're not going to go to the trouble of getting someone else's and going to continuing education. So very quickly, these slides are out of order, but you can go to the here's what the screen will look like. So quickly, where's that? So go to irs.gov/PTIN, log into your PTIN account. If you don't know the login, you should, because you just paid your $50 to renew. And if you haven't renewed your PTIN, do that, please. You don't need all of your CE uploaded. The IRS switched to CE providers. None of us have been able to upload since September. If you know you did your credits, but they're not all showing, please go ahead and register. The IRS does not mind. Anyway, so back to this topic. Go to your returns filed per PTIN, irs.gov/PTIN, log in. If you forgot the password, there's a self-service link at the bottom. From the main menu, click on additional activities. Then you can see view returns per PTIN. And a chart should appear. The chart looks a little like this. I borrowed someone else's, but you can clearly see down below during the 2016 processing year, this person e-filed or their PTIN appeared on 201 2015 returns, 16 2014 returns, 3 2013 returns, and a 2012 return. So kind of cool. You should just take a look at that. It's always behind, don't get me wrong, but I mean, if this person saw 1,000 returns filed, the alarm bell should go off, and you want to contact e-services or the RPO, Return Preparer Office, and get some help. So the ninth issue I want to mention to you is data backup. You need at least 2 copies of all of your data, and you should take one home. So back in the way early days when I owned block offices, long story short, the guys next door to me had a fire, and there was extensive damage to my building. The fire department wouldn't let me into the building. And you remember those 3.5-inch floppy disks? Well, I had 2 sets. They were very unreliable. So I had not 1, but 2 backups of that data. And where were they? In plastic cases on top of the server. Why? Because I was going to need them to put them into that server if there was a problem with the data. So lesson learned. Ever since then, I take a set home with me. You should too. Figure out how to do it, even if an employee needs to do it. Take that data home securely and safely, don't get me wrong, but you need an off-site one. Even if you're using an uploaded copy to the cloud, remember that it's going to take 2 or 3 days for that stuff to download, so probably you're going to need the company to burn a CD and overnight it to you, but still, you're going to need your data. Don't be afraid of using the cloud. Everyone's afraid, oh my gosh, the cloud. The insecurity of the cloud is the fact that you use a password, john@johnsheeley.com, and I love Kitty is my password. Why? Because everyone knows you use I love Kitty for everything. Use a secure password. There's also something about controlling your own encryption key that's beyond today, but email me if you want to talk about that. Happy to give you more information. But get a backup system in place. Do it today. If you're already using backup, try to restore a file, because I'm aware of people using tape backup. You find out that your tape backup your machine stopped working correctly, or there's something wrong with one of the tapes, and the backup you've been making doesn't work. So try and restore a file. If you have the time and the ability, try and do a full data restore to another computer, just to see if your data set is really backing up and how easy it's going to restore. Annually, replace your tapes, replace your portable hard drives. Certainly at the end of tax season and maybe at the end of the year, take a tape that you know is reliable and works, a tape or a hard drive, and save that file. Why? You have a picture of where you were at the end of the year in case you need it. Don't be cheap. $150, spend it, get a tax deduction. Go do that today, all right? You need that. I want to ask you if you're using engagement letters today. You know you must be, but you need to look at them and update your dates, whatever you have on them. You want to get those out now. Why? Clients should not be signing at pickup. I'm not an attorney, but my first argument to you would be, after you presented me with a return and a bill, you said sign the engagement letter? Really? Not only did I not have time to read it, I didn't have time to say no thank you. You had already done the work. So you want those engagement. If you have to do it at the last minute, you do, but otherwise, signed in advance, reviewed in advance, at worst, at their first visit to the office. Best if done in advance. Take a look at what you're excluding on your engagement letters. Currently, I'm excluding Sales tax, non-resident states, Form 8300, reasonable compensation, and worker classification. I'll help you with all of those things. Certainly, if I look at your return and you live in New York and you have a New Jersey W-2, yes, we're going to talk about your need for a non-resident return, and I'm going to do it. But I can't guess that you spend half the year commuting to Pennsylvania. If you don't tell me about it, I'm not going to be responsible for penalties 2 years from now when Pennsylvania catches you. You don't want to be either. Sales tax and some of these other things, let's face it, the client views you as quote-unquote their tax person, and if they have a tax problem, they're going to come to you. Well, you didn't hire me for sales tax probably isn't a good argument, and your client is going to have a good case. So just take a look at your engagement letter and think about what you're excluding. I hope this helped you. My thoughts. Communicate with your clients about these changes early. Use some of these changes to increase your fees, which is a good thing. And at the end of the day, ask for help. Do this now. Ask for help. There's plenty of people out there that want to help you. You can always email me, john@taxpracticepro.com. There are plenty of Facebook groups out there for networking and getting help. U.S. Tax Pros is one of the largest and one of the better ones. If you're a tax pro with a PTIN, they'll let you join. So it's a good group, all levels of folks, everybody's welcome. If you're looking for me on Facebook, there's a group now called Ask Sheeley. You can find me there. It's an inside joke, but it's kind of funny. For Affordable Care Act or Form 3115 questions, I have those two groups that I'm out there. If you have a marijuana taxation question, IRC 280 practitioners, another inside joke, but you can find me there. And I'm on a few of your state society websites, the New York EAs, New Jersey NATP, and I think Washington and Great West EA groups and Wisconsin EA groups. But reach out for help. I'll help you. Other people will help you. Have a successful and profitable tax season, all right? And take care.